Hello and welcome, I'm Kate and this is The Week in Forex, brought to you by MaxiForex. Today we'll take a look at the past week's market highlights. Global equity markets were down last week and as a result, the dollar strengthened early in the week. In the US, the bond markets rallied on two larger than expected auctions in the 2-year and the 5-year treasuries. The US third quarter GDP printed better than expected at 3.5%. Those two events put risk back at the forefront and the greenback started to weaken once again on Thursday. For a closer look at the markets, we're joined by foreign exchange analyst Martin Smith. Welcome, Martin.
Hi, Kate.
Now, the dollar rally was stopped dead in its tracks by the US GDP data. When will it finally be some good news for the dollar?
When the dollar becomes expensive to borrow, meaning when the US gets closer to a rate hike. The GDP figure, of course, represents economic growth. So where there's growth, there'll be demand for commodities. Thus, investors expect commodity prices to rally and they bid them up. One other point is that commodity prices like oil and gold are quoted off the dollar. So if the dollar weakens, the price of the commodity appreciates.
We spoke last week about central bankers releasing purposeful statements. Do you think that played a role in last week's sell-off?
Well, as we've seen all year, traders are very quick to capture P&L and take risk off the table. So in short, yes, I believe the comments last week certainly roiled the markets.
Which currencies are you going to be watching in the week ahead?
Well, the pound has intrigued me because I'm surprised at its current level. It's been trading very high in a tight range for 6 months now. I attribute the current price level to a negative dollar bias, meaning US rates are essentially zero, whereas in the UK it's 0.5%. In addition, the US debt is still ballooning. Therefore, as a trader, you will sell the weakest currency against others.
And what about from a fundamental perspective? What data will you be looking at for the week ahead?
Well, there are a number of rate decisions due out this week, including Australia, UK and US. Additionally, employment data will print in the US and Canada. I expect unemployment in the US will hit 9.9%. If it hits 10%, then expect high volatility in the markets. Australia also releases their quarterly monetary policy agenda, and that, coupled with an anticipated rate hike to 3.5%, will certainly contribute to price action in the market.
Martin Smith, as always, thank you very much. And thank you for watching. Remember, visit us at maxiforex.ru.